Bank Nifty is down 150 points almost and exerting pressure on the market.
And the Nifty is below 19,600. It's a 70-point cut.
Now it's up 43 points at the day's high.
We broke 19,600 early on. The low was, as Nigel said, about 19,550 or so. But look at what we've done since. We're back above 19,700 now, so that's a 0.25% higher. Well, 60 points higher on the Nifty. What a sea change as compared to where things were early on. So it's almost a 200-point recovery bounce from the day's lowest point. And it's a very, very good close.
You're watching us here on Markets Today, the show where we talk about all the top market headlines for the day. It was an interesting trading session. For most of today's trading session, the Nifty had a bit of a downward bias in a range. But thereafter, there was a dramatic recovery from the lows for both the Nifty as well as the Nifty Bank. The Nifty Bank ended mildly in the red. The mid-caps continued their surge upward. Let's talk about those important headlines that made news today. Sensex and the Nifty end with marginal gains after a late stellar recovery. Bank stocks declined, but mid-caps outperformed. Reliance, the top contributor to Nifty, on the way up. Vedanta slips nearly 7% after Moodys downgrades the corporate family rating of its parent Vedanta Resources over the likelihood of its restructuring debt on failing to refinance liabilities in a tight financial global market. The stock at an over 2-year low. HCG Chairman B.S. Ajay Kumar tells CNBC-TV18 that the promoters will have a say in the choice of investors in case majority partner CVC looks to sell its over 60% controlling stake. Positive brokerage note leads to a recovery in stocks like Infosys, LTIMindtree, and some top gainers coming in from the IT pack. We had Manappuram Finance surging about 4% after a big block as well, and Ujjivan Small Finance gains on a buy rating from DAM Capital. Coal Secretary Amrit Lal Meena says there is no coal shortage in India, adds that for Coal India, there is no plan to increase the FSA price. Is also confident that the company will achieve 780 million tons of volumes in FY24. Let's talk about the first important headline then. The market staged a smart late recovery from the lows to end in the green. The Nifty and the Sensex ended the day 0.25% higher. The Nifty Bank actually was in a bit of an underperformer. The mid-caps continued their outperformance, in fact ended about 0.75% higher. And the Nifty also recovered about 160 points from the lows. Prashant Nair joins in with a wrap of all the market action.
Well, the handoff from Wall Street was negative, and sure enough, we got a cut early on. The Nifty broke 19,600, got to low of about 19,550, but then the recovery set in, not just for the market here. So it was not an individual market move. Asia was up broadly. By the time we got to mid-afternoon, Europe started trading. Those markets were up. US futures also were in the green by about 1/3%. And I think the trigger for all of this was the fact that US Treasury yields on the 10-year, which hit 4.5% overnight, 4.55, that actually the futures cooled off a little bit and market took, that is a sign that maybe yields are on the upside losing momentum. We'll find out once we get trading in the US session. Bank Nifty ended flat, off the lows, but ended flat. That was the underperformer as compared to the Nifty. Mid caps, 0.75% gain on the index. Small caps, a full 1%, so no problems there. Nifty gains coming through in names like Coal India, L&T, Cipla, ITC, LTIMindtree. There was Sun Pharma, which did well. Losses coming through in names like Titan, Grasim, and Hero MotoCorp. In the broader market, huge list of volume-led gainers. Long list. REC, PFC perked up. Ujjivan was strong. Tata Investment Corporation, Manappuram, there was Gravita India, Senco, the fairly recent listing from the eastern part of the country, Shreyas Shipping, HLE Glasscoat, Borosil Renewables, Mapma India, Schaeffler, Atul Auto, 6% gains today. There was Keynes, BL Kashyap, which is now almost at about 60 rupees or so. So very strong gains here. Losses coming through in Vedanta, of course, news related. There was Gujarat Gas, Idea Forge and NIIT Limited, which were down. Now, Asia and Europe, and of course the market here is held on, has avoided the cuts from overnight in Wall Street. I think the cues which we need to watch are the same. Will we see yields topping off in the US? Will we see the dollar being well behaved when we come back? And will oil stop moving up? I think those are the three things which will determine the near term for the market. Back to you.
All right, Prashant, thanks a lot for that. In fact, market veteran Mark Mobius is betting big on the India story in a conversation with CNBC-TV18. He said that it did not make sense for them to reduce their India holding, as the India picture was still very positive despite the run-up that we've seen.
We see so many opportunities in India Now, of course, there's going to be corrections along the way. We, of course, pay attention to that and have cash on hand to take advantage of these corrections. But we'd like to see maybe a 20% correction before we dive back in. But nevertheless, we're holding on to what we have and adding on the margins because we believe that the opportunities in India are terrific. And the whole picture for India is so positive that it doesn't make sense to reduce our holdings in India.
Moving on to a market-related story, another one, an important one. The National Stock Exchange is actually considering extending of trading hours for equity and derivatives in a phased manner. It's also planning to eventually extend overall trading hours for the cash markets as well. Anuj joins in with the details. Anuj, what's the buzz that you're hearing from the market?
Well, the hot topic of discussion has been extending trading hours. Now, that's something which has divided the trader community, the traders and investor community. Look, what does the NSE want? The NSE wants to increase trading hours in phases. The first phase is to introduce an evening session for index futures and options between 6 to 9 p.m. and then take it further up to all the way up to 11:30 p.m., almost midnight, for which it has approval in place. After that, the extension has to take place in cash market, where they want to increase the timing from 3:30 to 5 p.m. Now, as I said, there's in principle not to do that, and exchanges have had that for a really long time, and they wanted to increase trading hours for a really long time. Now, what are the pros and cons? The arguments in favor essentially are that we need to align ourselves with global markets. There are a lot of times when the markets are reacting to news in the evening. For example, the US inflation data, the Fed announcements, the US market opening. So many data points come in the evening and we only react early in the morning. That really is the biggest argument in favor of extending the trading hours. Now, the arguments against extending trading hours. It's impossible to align completely, right? I mean, then where do you stop? The Japanese market, for example, opens early in the morning, say at 5:30. Then do you start an early morning session as well? Some markets are open on Sundays, for example. Then where do you stop? The other element here is the cost angle, especially for the brokerages, the smaller brokerages. The bigger brokerages can manage, but the smaller brokerages, their cost will double because they'll have to do double shift. So that's another reason against it. The work-life balance for traders and investors, that gets distorted. And a lot of traders and investors who do a lot of homework before the markets open and after the markets close. So where will all that time come from? So there are arguments for and against that, of course. How things stand here right now, there was a Reuters report that the SEBI is studying it, yet to give a formal approval. They want the system to be ready. The sense I got was that it may not happen up until at least March of 2024.
All right, up until March of 2024, but that's not too far away. And it will be interesting to see whether trading does get extended. And if that was to happen, then apart from brokers, let's see what happens to financial journalists like you and me as well. But let's move on to the second headline now. Vedanta slipped nearly 7%, hitting a 52-week low. Moody's has downgraded the corporate family rating of Vedanta Resources due to elevated risks of debt restructuring over the next few months. The company's CFR, that's the corporate financial rating, has been downgraded to CAA2 from CAA1. What does this imply? Nigel joins in with the detail. Nigel.
Well, that's right. Vedanta is under pressure because Moody's has gone ahead and downgraded the CFR, that's the corporate family rating of Vedanta Resources. Now, the CFR of Vedanta Resources earlier was CAA1. It's been downgraded to CAA2. Remember, why is this important? Because Vedanta Resources is the parent of Vedanta Limited that's listed here in India. Now, the reasons that Moody has given for the downgrade on Vedanta Resources is there are elevated risk with regard to debt restructuring over the next few months. They've also added that the global picture itself with regard to refinancing, that's got a little bit tighter for them, and that in fact is not good news. They also go on to say that the company has made little progress with regard to refinancing on that debt that's maturing in the next year or year and a half as well. And they have highlighted two big payments. One is in January 2024 as well as August 2024. They're talking about the $1 billion worth of bonds that are up for majority, and they're a little bit worried on that front. Put all that together, Vedanta Resources gets downgraded by Moody's, which is putting pressure on the Indian listed entity, Vedanta Limited, because that's its parent getting downgraded. Back to you.
All right, Nigel, thanks a lot for that. That explains the big cut that we saw on Vedanta itself. With that, let's talk about the third headline, Healthcare Global. The stock gained over 3.5% in today's trading session. Reports suggested that the promoter, CVC, is actually exploring the sale of its controlling stake in the company. We spoke with the management. The executive chairman, B.S. Ajay Kumar, did say that HCG is in a very strong position for growth. Also added that a long-term partner will actually be good for the company. And were CVC to consider selling their stake, as reports suggested, they would have the choice of the partner who they'll sell to. Let's hear them out.
On the agreement, we are co-controllers until a particular time. So at this point, we have equal rights. Technically, by the agreement, yes, they would require my okay at this point. But HCG is in a very strong position for growth because the number of centers we have had, 24 centers, and we are in a consolidation phase. As we move on to the long-term growth phase of doing even greenfield, brownfield, and strategic alliances, mergers and acquisition, I think our growth strategy can be phenomenal because, we are still not there in several parts of the country. And we are establishing centers of excellence across South, West, East, and North is still lacking. It depends on, of course, the valuation, what if and when CVC wants to exit, what is their level of satisfaction. But I think a long-term partner would be very good for HCG as we move along. But we have to see, the realities of the game and decide. I have diluted some because of my personal need. At this point, I am really very neutral. I want to really stay focused on it. So I really cannot comment on this.
All right. 34 companies listed on Dalal Street at a discount between 2020 and 2022. And a CNBC-TV18 analysis of that shows that not all of them destroyed investor wealth. Some actually ended up delivering substantial returns over time. And we're doing this discussion as a lot of these IPOs are hitting D Street, and then we're seeing them list on D Street as well. So what this basically means is not everything that lists at a premium is great, and not everything that lists at a discount is perhaps a wealth destroyer. Hormaz Patakia joins in with a detailed report on this one. Hormaz.
Absolutely. It's some very interesting data coming in when we take a look at the IPOs during this 3-year period between 2020 and 2022. Now, in this analysis, we are not considering IPOs that have listed this year for two reasons. One is that most of these issues have listed and are trading at a substantial premium to their IPO price. And two is that the window to analyze shareholder returns is very short because some of the IPOs have listed as early as today. So let's take a look at the IPOs between 2020 and 2022. We had 120 main board IPOs that came out during this 3-year window, of which 86 of them listed at a premium, while 34 of them listed at a discount. And it is these 34 stocks that we'll be focusing on. Now, out of these 34 names, there are 8 of them that listed at a discount, but over a period of time, they have given returns of at least 100% and more. And 5 of them have given returns between 50 to 90%. Now, let's take a look at this 100% plus list, and you would see the likes of Angel One, Macrotech, Craftsman Automation, IRFC, all of them listed at a substantial discount to their issue price, but then look at the returns that they have given. And the other list includes Equitas Small Finance Bank, Kalyan Jewellers, Metro Brands, Ethos. All of them listed at a discount but have generated substantial returns over a period of time. Now, I'd like to single out Angel One here, and it listed 3 years ago. And incidentally, it was 25th of September when it closed its IPO as Angel Broking. And it listed at an 11% discount to its issue price, which was around 306 rupees. Since then, the stock is up 6 times and is now currently trading close to 2,000 rupees. So now these were the IPOs that have surprised investors in a good way. Now, on the flip side, there are also some that have given a rude jolt to the investors, and we analyzed that 9 such IPOs that listed at a substantial premium to their issue price are now trading below their IPO price. Now, let's take a look at that list, and you'd see the likes of Chemcon Specialty Chemicals, Nureka, Heranba Industries, Nazara Tech, which almost doubled on its listing day. Chemcon also doubled, but now all of them are trading below their IPO price. And then comes the new age companies like Nykaa, PB Fintech, and all of these companies also traded at a strong premium to their issue price, but now are trading well below their IPO price. Now, these are the IPOs that we have analyzed over the last 3 years. Some surprises and some duds as well. But the moral of the story, don't get too swayed by the listing day pop. Always look for enduring value.
And roaring value indeed. I mean, that's the case with stock market investing itself. Value that endures is the value that grows, compounds over a period of time as well. Thank you for that, Hormaz. We'll be back with more headlines on the other side of this short break. Stay tuned. Welcome back. You're watching us here on Markets Today. We've talked about all that has moved the market, but there are some important headlines left as well. Let's talk about the fourth one. IT stocks in focus after brokerage firm Morgan Stanley revised its target by about 11 to 29% across the board. Nirmal Bang reduced its FY25 estimates, though they believe growth will be slower in the long term. Rima joins in with all those details, the bull versus the bear case.
Thanks so much for that. So you think of IT and immediately you would think about the outperformance that we've seen in IT stocks in the face of weak results. The question is, what next? Where does it go from here? And I'm here to present the bull versus bear argument on IT. So let me start with Morgan Stanley, which has raised the target price across all IT companies. The biggest price increase has been on Cyient, where the target price has been upped by nearly 29%, and it's followed by LTTS, L&T Technology Services, where the target price is up by 25%. On Wipro and Emphasis, the increase in target price is a bit more modest, 11 to 12%. So basically, between 11 and 29% is the increase in target price. The rationale given by Morgan Stanley is one, double-digit revenue growth in FY25, which according to them is higher than consensus. And secondly, they expect EBIT margins to improve starting Q1 FY25. But there is always a but, right? You've got Nirmal Bang, on the other hand, which has cut its FY25 estimates. They believe growth will be slower for longer and would recommend selling into the FOMO rally that we've seen on IT. Their argument is that market is taking the view that the worst is over and revenue and earnings will start accelerating sharply in FY25, driven by a stronger US economy. But Nirmal Bang is taking the macro call that US recession has been delayed, but they do believe it will happen in 2024. In fact, they're expecting a mid-single-digit revenue growth for IT companies in FY25, which is a contrast to Morgan Stanley, because Morgan Stanley is expecting a double-digit revenue growth. Nirmal Bang believes revenues will pick up only in FY26. They're also not in the camp about margins improving in FY25, as Morgan expects, because Nirmal Bang says the big deals that the IT companies have won, they've been fiercely there's been fierce competition in them, and they're priced to win. And just to underscore how divergent their views are on stocks, these are the target prices. As you can see, they're on the other end of the spectrum. On Infi, Morgan Stanley has a 10% upside, but Nirmal Bang sees a 15% downside. On HCL Tech, that's another one. Morgan sees a 15% upside, Nirmal Bang sees an 18% downside. And particularly, it's Tech Mahindra, which has seen a solid 25-26% rally year to date. The opinion is very divided. Morgan today has downgraded Tech Mahindra to an underweight from an equal weight, because they say the stock has seen a strong rally despite the earnings cut, which makes the valuations expensive. They have low confidence on growth revival in their telecom vertical, and any potential turnaround due to the management change, according to them, has been priced in. But you've got a Nirmal Bang, which has upgraded Tech Mahindra to an accumulate. So they're saying go out and buy. And that's because the margin expansion in FY26 may surprise on the upside under the new management, because it's starting off on a low base. So that's what they're expecting on Tech Mahindra. Back to you.
All right, Rima, thanks a lot for that interesting note there. Manappuram Finance was the other stock that rallied nearly 5% after almost 43 lakh shares were bought by Elizabeth Matthew. The block deal is worth over 61 crore rupees. Why is this important? Abhishek Kothari standing by with the details.
Well, in Manappuram, Elizabeth Matthew has bought about 43.5 lakh shares at an average price of 141.29 per share. So this translates into an investment of close to about 61.5 crore, which again translates into 0.51% of equity holding in the company. So Elizabeth Matthew is wife of Matthew Syriac. About Matthew Syriac, he's the executive chairman and founder of Florentry Advisors, former Blackstone India head. And if you take a look at his portfolio, he recently added, or he has added Indiabulls Housing Finance, Reliance Infra, Hindustan Media, AGS Transact, as well as PTC India. While on the reduction side, he's reduced his holding in Gym Labs. Back to you.
All right, Abhishek. The fifth headline today was Coal Secretary Amritlal Meena saying that there is no shortage of coal in India. He added that there is no plan to increase the FSA price for Coal India as well. And he's also confident that the company will achieve its volume target of 780 million tons in FY24.
So all Coal India Limited, Singareni Company and the private sector coal mines, all are contributing as per their plans, and there is actually no shortage as far as the plant supply is concerned. Now we have stocks about 23 million ton at the thermal power plant end. The coal being supplied from Coal India for the thermal power plants, it is supplied at the notified price and will continue to be supplied at the notified price. The target for Coal India is 780 million ton, and the production so far in last 5 months is 100% as per the target which we have planned for, and I am sure that in next 6.5 months also, Coal India will produce as per the target. So we are hopeful of 780 from Coal India. There are no such plan and proposals, and I really can't comment on it.
All right, with that, we wrap up on this edition of Markets Today. Thank you so much for watching. Stay tuned for more news and updates to CNBC TV 18.